Hi everyone, my name is Doug Campbell and I want to welcome you back to my series on YouTube, A Simple Method of Consistent Profits. Today we're going to jump into the indicator. We'll go through some of the details of the indicator. We're going to look at some charts and hopefully you'll get a better understanding of this indicator and just how simple it is to use. So hang around, we'll get right after it. I know your time is valuable and so I don't want to waste any of it. Let's get after it. Okay, well, thank you for coming back. And I'd like to ask you if this is the first time that you've come here, if you like this kind of content, please do me a favor and click the like button here and also click the subscribe button. I want to continue to provide this kind of information and provide it for free. Now, I've already had friends and family and stuff. Why in the world would you want to give this away free? You could package this up and sell it. And it's true, I could. We've all seen that. In fact, the industry is chock full of that. And it's very confusing for the new trader. It's very confusing for a lot of folks because we get sent all of this stuff in our email about these, magical super secret things that are going to give us the riches of kings, and for the most part they don't work. So I wanted to clear that up, and I want to do this because it's important to me to help other traders be profitable. And so there's nothing fancy about this and there's nothing magic about this. Okay, this is going to require some hard work, effort on your part, but with a little bit of effort, I think you'll see this indicator is very, very simple to use. Now, let's take a look here at this indicator. Now, on my platform, it's called the volatility stop indicator. Now, the volatility stop indicator is something you just search for and apply it to your charts. And here's my settings. It's actually an average true range indicator. And I have the true range period set to 10 periods, and the true range multiplier of 1.5. Now, when you see this indicator, you'll think that looks an awful lot like the parabolic stop and reversal indicator. But trust me on this, PSAR will not respond to volatility changes like this will. And it makes this indicator pretty darn unique if you have a system to follow it. And that's what we'll talk about as we build on this series. So this chart I showed you in the first video, and this is just a real, simple entry and an exit with a 38% gain. Well, how do you go about finding that entry? How do you get in? How do you get out? Now, first let me make a comment here. I use this very simple chart. I think most people overcrowd their charts with too many indicators. And as a matter of fact, because price is the most important thing for you to make money, and that movement of price is the most important thing, we cloud that with too many indicators, and all of a sudden price just kind of disappears. And as a matter of fact, when you put all those fancy colorful indicators on your chart, one of the things that tends to happen is your eyes get drawn away from price, and you're evaluating an indicator. You're not evaluating what the actual stock is doing. Well, this indicator is a little bit different, and it doesn't cloud the price action, okay? And it helps you see good quality entries and exit points, and it's really easy to follow. So here's this chart without it. Here's the chart with the indicator. Now, like I say, if you've seen a parabolic SAR indicator, you think, well, that's parabolic SAR, but it's not. It's called volatility stop. Now, I'm going to, in the description, there'll be a PDF for you on how to set it up in my platform, which is TC2000. And I also use the Thinkorswim platform, and I have a PDF that was drawn up by a friend of mine who actually put together the coding for it that matches this indicator perfectly. and will help you if you use Thinkorswim charts. Now, please keep in mind I can't give you, I don't have the coding for all different platforms out there, but feel free to look at this code, look into the indicator, and reverse engineer it for your platform. It's actually fairly simple to do. Okay, so here's that same entry. Now, why did I pick this entry? Well, first, technically, this is a very good entry point. When you look at this chart, you'll see that price has been making higher lows here, and that it broke out above this resistance point, price resistance point, and then buyers stepped in, reacting to that price support. So it's actually a very good entry signal on its own. You don't really need the indicator if you learn to read price, but if you're struggling as a trader, this can be very helpful to you. So you can see now all this indicator is really doing is helping you see support and resistance and helping you decide where you need to place your stop loss. It's that simple. So the rule that I use is, here we get these red dots. That's showing us price resistance. And if you look right here, that is price resistance. When we cross over, it turns to price support. Very, very simple, but it's an easy method of spotting price support and resistance. Okay, so what I like to do, and particularly if you're struggling as a trader, the thing that you want to do is let any red turn to green and then wait for the lower risk entry. And I like to wait for that pullback and get that confirmation that buyers are stepping back in at or near price support. So there's my buy signal to get into that trade. Now, with this volatility stop indicator, your stop loss is that dot the day before. And what I like to do is place my stop below that, because that's marking out price support. What happens commonly in trading is that price is always testing support. Always testing support, always testing resistance. So when this pulled back, it tested support but bounced off of it. So I don't want to have my stop so close that I get stopped out a lot. I want to have my stop just a little bit below so I can allow that trade to move. Now, you do not adjust this stop loss until the end of the period. So this is a daily chart. So at the end of the period, meaning the end of the day, you can move your stop loss, and then you just simply follow that trade with your stop loss until it takes you out right here on that day. Very simple and easy to use. Now, you could easily have taken yourself out of this trade anywhere in here at a beautiful, beautiful profit. But if you ever have a concern with any of that, you get yourself out, just follow along with the stops, and you get taken out automatically. Okay? So here's that 5-minute chart I showed you in SQ. And SQ had a really nice pop on the morning and started to move and caught just this little pullback right here and then put in a bullish engulfing candle. All right. So without it, you can see the price action is definitely readable, but it may be a little bit more complicated for most. Also notice all we're going to show you here with this indicator is that right in here, we broke above this price support and we looked for a lower risk entry into that trade. So here's the same chart with the indicator added, and you can see we pop above that resistance level and then we take a little bit of a rest and we get this nice bullish candle here. So our entry is very close to our stop loss. Our stop loss should be right below that dot right there. And this is a 5-minute chart. So every 5-minute bar after it closes, all you have to do is move your stop loss. Okay. Now, obviously, One of the things that you're seeing here that's really important is you want a stock that's trending. Now, I have a fundamental belief in my trading. There's no easier way to make money in the market than finding a stock that's proving it wants to go up and then simply following it up. Stop predicting, just simply follow a chart as it's moving up and proving it wants to go up. Don't trade against the overall market. Just find a trending chart and wait for the entry. Okay, so here you can see, very nice, this taking you all the way up here till it finally stopped you out in this trade. Okay, and one of the things you want to notice when you get big bars like this, when you get a big bar like that, notice that the stop jumps up here. Notice that that is nothing more than we cleared these price wicks right there. We cleared those price wicks, jumped up, and as the stock continued to move, this indicator responds to that volatility, adjusting the stop tighter so that you can maintain your position easier, and you can avoid big volatile moves or stopping yourself out too early by adjusting your stops too soon. Okay. Here's that same chart in applied materials. And this is a weekly chart, and I'm just showing you different time frames so that you can see how simple and easy this is to use. Now, once again, I want you to notice that this is a trending chart, and I'm looking at the same kind of patterns. I'm looking at stocks that are breaking through resistance. They're coming back and testing support, and I'm getting confirmation of buyers stepping back in. And that's what we're looking at here. But if you have difficulty spotting that in just simply the price action, if you add that volatility stop indicator to the chart, notice how clearly it marks this out. Red, turn to green, and then we wait for the low risk entry points to enter into this trade. Again, stopped out here, 18% gain. Now this is a current chart as of right now. Had you entered this trade, and here's my suggestion again, red turns to green, wait for the lower risk entry buy signal. Now why do I want to do that? Well, this is part of the rules of this trade or this indicator. If you've been struggling as a trader, if your win-loss ratio is suffering, to improve that, wait for the higher probability trade. If you're consistently profitable already, you can aggressively buy this, but we have to always notice that if we're buying at or near price resistance, there is the chance, the probability of a pullback, at a minimum to retest price support. Now, what happens to a lot of new traders is they buy at this resistance point, the stock starts pulling back, they panic, they sell, and then the stock starts back up. Now, if you've traded very long, that's happened to you. It's happened to me. It's happened to every trader out there. You panic in a trade like that, and right off of price support, it bounces up. The problem is we're not recognizing resistance and we're not recognizing support. And if we can recognize those points and wait for the lower risk entry, stop loss is very, very close, you'll improve your win-loss ratio, and you'll start seeing your account grow consistently. So you can see this trade is up 29%, and we are still going up in this trade. All you have to do end of day or end of week on this is manage your stop. So here's a simple chart on just showing here on shop again, the same chart. When you read this indicator, we're going to look for these simple swings. Okay, you can see we have them in here. We swing up, we come back. You could have bought this, it wouldn't have been very profitable, and then we turn red. So we stay out of this trade. We try to get in here, but there's no clear buy signal. The longer this happens, we end up in chop. Okay, so we want to wait for the good quality signals. Here again, we had some clues to this. This is a wedge pattern that is formed. And that wedge pattern showed higher lows, also showed lower highs, but the pressure was building on this to go one way or another. We don't know which way it's going to go. We can't predict that. Don't even want to try. What I want to do is wait and let the price move, pull back, and then give me that low risk entry into that trade, and then we just follow along. Same thing here on that 5-minute chart. We're going to let that chart tell us when we should enter. Now here's, I think, something very, very important. We as traders tend to always want to catch the perfect entry. And I told you about this entry here, but would it matter? Would it matter at all to you if you were trading this chart, if you entered here, or if you entered here? Not at all, because you're trading a trend and all you have to do is wait for the entry. So if you miss one, just give it some time. Another entry is coming soon. That bus is going to come around the corner again. As long as it stays in the trend, wait for the next trade. Don't chase it. Wait for the low risk entry into that trade. Same thing true here, and you can see it just happens over and over and over. If you are an aggressive trader, and I say consistently profitable already, then you could take this big Morningstar type pattern right here and trade this. Stop loss is fairly close under this little double bottom. But if you're not confident, you can see what you wanted to do was take this one. Now this one was profitable, but often this could have hit this resistance and fell back. By being patient, by waiting for this entry, when we pull back and see confirmation of buyers stepping in at price support, we have a higher probability trade. Less pressure gets taken on the trade. Okay? Same thing is true here. By waiting, by being patient, we don't have to worry about that resistance causing us trouble. We can catch that lower risk entry. And if you are stopped out, and it will happen, I guarantee you it will happen. If you are stopped out, your stop loss is close. You have very small losses with this system. Now, this is a current chart of Adobe. Whoop. Look at how this is the same pattern that I just showed you. This stock had been downtrending. Adobe had been in a downtrend. And then it started making higher lows right here. We break out of this high. Notice it tells us where that price support is with the indicator. And we enter that trade close to that stop. And I want you to notice that this trade has gone months, and the first stop out was right there. Months into that trade without taking a stop, without taking heat into the trade. So essentially you're looking at entry somewhere around here over a 30, well no, almost a $21, $22 run in Adobe. Just trading a daily chart. Very, very simple. Here's another chart I've been trading. WTW. You can see WTW here. This was an earnings gap over here. Stock gapped up on earnings. But notice in this pullback, here's why we don't chase. In this pullback, we consolidate this, but we can't hold it. It moved a little bit too far, too fast, and you can see it flipped over. That's why we wait for that low risk entry. We want to wait for that confirmation of buyers stepping in at support, and that just didn't happen there. So the stock trails on down. Now, if you short, if you like to short, the breaking of that support, we wait for an entry here. These are your stop losses for short. You don't get stopped out of that short trade until here. So you can short with this just as easy as going long. Now, my entry into, and actually I've taken several entries into this trade. One of them was right here, and you can see Why? Red turned to green, wait for the low risk entry, buy into that trade, my stop loss is close, and then I just adjust as the market moves. Now, had you not caught that entry, it would have been really easy to catch that entry. Or this one, as this stock just continued to trend to the upside, still going, still trending. Now, one of the keys to doing this is learning how to identify qualified stocks, okay? So that's what we're going to do in the next video. I'm going to show you how I qualify stocks, whether you're a stock trader, an option trader, ETF trader, it really doesn't matter. I'm going to show you how to build a qualified watch list so that you're not chasing trades around. We actually make those trades come to you, okay? So everyone, I hope you appreciated this. If you did, please make sure and click that link to subscribe so that you'll be notified of the next video in the series. Everyone take care, and I will talk to you all soon.